My guest today is Yianni Garcia. He's the founder of the Rate Right mortgage team. Best mortgage hack most people don't know.
You can buy a home with 0% down.
What's the biggest myth about mortgages?
There's going to be potentially a market crash, so I'm going to wait for prices to go down. And for every 1% that rates go down, millions of new buyers flood into the market. 50% of homeowners have more than 50% of equity in their home or more. I left a C-level role at a large company with very cushy salary and benefits and all of those things that come with that to work in a business that's 100% commission.
Friends, welcome back to the Marty Davis Show, where we turn stumbling blocks into stepping stones. And we also bring on guests who bring us information, expertise, and things we can use in our own lives. There's a perception that buying your own home is an impossible task. There's the credit checks, the down payment, the fear of rejection. Also sounds like my dating life. But the truth is that many people just don't realize the opportunities that are out there. And so what we wanted to share with you is that there are folks with knowledge in this that can help make this process much easier. My guest today is Yianni Garcia. He's the founder of the Rate Right mortgage team, a Miami-based mortgage brokerage that's helped families, entrepreneurs, veterans experience the joy of homeownership and to navigate the tricky parts of getting that mortgage and the money necessary. Not everyone has all the requirements that you need to get that easy mortgage. There are some challenges out there, and Yianni is here and his team is here to help you work through those. So we're excited to have you here, Yianni, to be helping us with navigating those tough areas. We're filming today from the beautiful Arlo Wynwood. It's one of the newest hotels in the Miami Arts District, designed by famed architect Marty Davis, unfortunately no relative. But he's done a great job in building this hotel to fit its neighborhood. As I mentioned, we're in the Arts District. The hotel is filled with interesting art, interesting work, and is a real retreat for travelers. So we're very thankful to the Arlo Wynwood for hosting us and being a partner in our podcast.
First of all, thank you for having me. I've been a fan of your show for quite a while, and It's exciting to be here with you. So thanks for including me. I'm really appreciative.
We're glad you're here.
Absolutely.
So, Yianni, you had a long run in the marketing area of business, right? Before you went into mortgage brokerage. What led you into the mortgage world, and how did you get from marketing to now being a mortgage broker?
Sure. So I was in the marketing and digital consulting world for about 15 years before I started my mortgage business. And the last 5 of those 15-ish years was actually at a mortgage bank. So I kind of got that job kind of by accident. I was doing marketing and digital innovation at Lennar, which is one of the largest home builders in the US, and they had an in-house mortgage company. So there was a lot of opportunity for my skill sets in marketing and innovation and digital strategy within the mortgage company at Lennar. So I took that on and became, their head of marketing and digital mortgage strategy for a number of years. And then I became the chief marketing officer of a mortgage bank after that. And, I quickly became very enamored with the mortgage industry just because there's so many, what I call mortgage myths that keep people from achieving homeownership. And really what bridges that gap is education, right? It's really knowing that you don't need a 700 credit score to buy a home, and you don't need a 20% down payment to buy a home. And if you're self-employed and you're showing perhaps not as much income in your tax returns, right? There's a lot of entrepreneurs that to not pay as much in taxes, which is totally legal. I do it, you do it. Why pay more taxes than you should? But there are programs that allow you to have significant more buying power with things like bank statements or a P&L as opposed to tax returns.
So people need to know that they need to go to a broker who knows what they're doing and has this experience, right?
100%, because the superpower of being a wholesale mortgage broker is optionality, right? You basically have two types of loan officers. You have those who work for a retail lender, like a Bank of America or a Chase or a Rocket, right? And they fund their own loans, right? So their few programs and their guidelines and their rates are pretty much set on a day-to-day basis, right? Where with a wholesale mortgage broker like my team, we have a network of over 270 wholesale mortgage brokers that we can broker to. So what that means is that we go into the wholesale market and we find not only the best priced option, but also what is that niche program that you need to get to where you need to go with the best pricing, the best rate, the best terms.
So to fit your customer's situation, basically.
Exactly, yeah.
So you're merging those two together.
Yeah.
Do you remember your first mortgage client?
I do.
What did you learn from that experience?
Well, I was a first-time home buyer myself, not much earlier than this young couple who were buying their first home. So I empathize with the stress and excitement and uncertainty that goes into buying a home for your first time. Just because I was in their shoes,
just that, yeah.
not that long before they bought their home. And so for me, it's, I speak with other mortgage professionals who are like, oh, first-time home buyers, they're a lot of work, but I love them because I love being able to, shepherd someone through the process, educate them every step of the way. I love when I do an initial consultation with a client who's looking to buy their first property, them feeling empowered, right? Like they have enough information now to know not only what their buying power is, but how to approach it, what's the best option. That I find is what gets someone from kind of passively exploring homeownership to actively looking and looking with confidence.
Yeah.
Yeah.
No. So, which leads me to my next question. What's the biggest myth about mortgages and that keeps people from even trying to get them?
I found that the myths change, the misconceptions change, the obstacles that people perceive. And I found that this past year, there were three things that I kept seeing over and over. One is, I don't have enough money for a down payment, right? Two is I'm waiting for rates to go down. And three is, there's going to be potentially a market crash, so I'm going to wait for prices to go down and for that crash to come for me to swoop in and get a great deal. And we can tackle each and every one of them if you like, but there's...
Well, I was at a program that you gave for the Greater Miami Chamber where you discussed just those things. So I think I would like you to take them one at a time and explain to our audience why those are myths.
Sure. So let's start with, are we going to see a market crash, right? There is no indication that we are going to see a market crash like we did in 2008 for a number of reasons. First, the forward-looking indicators that I look at is the amount of listings that are going on the market, the amount of people who are underwater on their mortgage, and also the amount of equity that the American homeowner has. Right? Those things back in 2008 were at significantly higher levels, right? Not to mention that now we have laws in place that don't allow us to give mortgages to people that cannot repay them, right? So what do we see? We see that the American homeowner has over something like $16 trillion in equity in their homes, right? 50% of homeowners have more than 50% of equity in their home or more. So the American homeowner has an incredible amount of wealth through equity, right? And when you see a crash happens when people need to sell their homes because they have no other choice, right? So we see record low unemployment, we see wage growth, we see a record amount of equity in people's properties. So people have options, right, than to sell from a place of distress. In addition to that, we are seeing that listings are starting to, and obviously every market is different. Some markets are stronger than others, but there isn't an indicator nationwide that a crash is imminent. We may see a correction, meaning that prices are going to go down and are going down in certain markets, right? For example, in South Florida, we're seeing a higher inventory in condos. So you're getting really great deals in condos right now because there's just more of them, right? And they're staying on the market longer. So more of my condo deals have price reductions and seller credits that help offset the closing costs. So I think that is more likely, right? So that's one objection that I see. There's also something to keep in mind, which is there's a cost to waiting, right? So if you have especially single family homes that are still appreciating, right? If you, for example, are waiting for rates to go down, right? Rates may or may not go down, right? The Fannie Mae Mortgage Bankers Association, the Shiller's Case Index, these authorities on projections on the industry, all kind of estimate anywhere from the high fives to low to mid sixes is where rates are going to be for the coming year, which is sort of where we are today. We're in the low to mid sixes on a conventional loan. But what people don't often realize is that, if you're buying a $500,000 home, right? And let's say next year rates are 1% lower, right? We can get you into a 5% instead of a 6%. Sure, your monthly payment may be $300 less, right? So you're going to save, I don't know, $4,000 more, give or take, in that year. But that home would have appreciated maybe 5 or 6 or 7%. So now you're paying tens of thousands of dollars more for the same property to save, $4,000 or $3,500.
Right.
And not to mention that for every 1% that rates go down, millions of new buyers flood into the market. So it's very likely that those pricing concessions and seller credits are going to be harder to
go
get.
away. Right.
Yeah.
And you're going to need a bigger mortgage unless you had a bigger down payment because the house costs more.
Exactly.
Yeah, no, there's a lot of reasons. And, I think it's interesting, too, that people think, well, mortgage rates are so high in this middle 6%. Not enough people have enough age to remember those days of 18% mortgages.
Right.
They've lived through 3% and 4% mortgages for so long.
Yeah.
But, that's really unrealistic. This is really where I think we're going to see it, right? That 5 to 6% range, not maybe just for the year, but kind of a long-term trend, don't you think?
Yeah, no, I think you're absolutely right. At least where the data is taking us now is that, most major organizations that track this are tracking, somewhere in the high fives, low sixes for the coming year, right? But, the beauty of having higher rates is that you have less competition.
Right.
And when you think about it, less competition for a home can ultimately be more money in your pocket in the form of seller credits that help you offset your closing costs, in the form of price reductions. That in itself, it's oftentimes a more strategic investment.
Sure.
Than, you wait for rates to go down 1% when and if they go down, and you're going into a much more competitive market.
Right.
Yeah.
And now it's all this talk about the Fed lowering rates and whether they're going to lower them more than the 1/4 of a point that they did, and if there's going to be 2 more before the end of the year. But that doesn't necessarily correlate exactly with mortgage rates, does it?
You're absolutely right. It's a common misconception that the prime rate, which is the rate that the Federal Reserve controls, they call it the Fed rate, the technical term is the prime rate, affects mortgages, right? And although there's a synergy between the two, they're not 100% correlated, right? So the prime rate, what it directly affects is short-term debt. So you'll notice that when the Federal Reserve lowered the prime rate by 1/4, the APR on your credit card maybe went down by 1/4.
Right.
And maybe if you have a adjustable car loan, that may have gone down by 1/4. You also notice that the yield on your savings may have gone down on your card.
Absolutely went down 1/4 immediately, right?
Yeah.
Yes.
So that is what the prime rate controls, not mortgages.
Not mortgages.
Mortgages react to the bond market, which in turn reacts to inflation, right? So when inflation goes up, mortgage rates go up, and vice versa. So what happens historically, and is what we saw this past month, is that mortgage rates will go down in anticipation of the prime rate, of an expectation that the prime rate is going to go down. Because what that's telling the bond market is, hey, investors, the Federal Reserve is going to lower the prime rate because they feel that inflation is under control. Right? And so that tends to, but what happens? as we saw in this past couple of weeks, rates went down to the lowest they've been in 3 years. They went down to the low sixes, almost 6% flat on a 30-year fix. And then immediately after, they went up 4 times. From now, we're now in the, getting closer
6.3, something like that.
Exactly, we're in the 6.3 territory. And the reason that happened is because, one, the jobs report came back and we added more jobs than we thought we would. So that is a sign that more people have jobs, they're going to spend more money, inflation may go up, and it's actually ticking up, right? The consumer pricing index came out also saying that some goods and services have gone up in price. So those things are the things that tend to affect mortgage rates more directly.
More than the Fed rate, yes.
Yeah.
So a lot of people I talk to say, well, I need 20% down and I need a perfect credit score in order to buy a house. Is that true?
No, absolutely not. So I'll tell you a story. So I just helped a young lady purchase her first home, and she purchased a $500,000 house, and she told me that she didn't have more than $10,000 to her name. That's the most she had. And I said, okay, that's going to be challenging because not only you have a down payment, right, which the minimum down payment for a conventional loan is 3%, but that's $15,000 on a $500,000 property. And then you also have to factor in closing costs, right? Closing costs include, title fees and title insurance and transfer taxes and prepaids for your homeowner's insurance for the year. There's a lot of different things that are made up of that closing cost. But we were able to do it because we were able to do 2 things. One is that we found her a down payment assistance program that covered 100% of her down payment, right? So that was 1. And then 2, we were able to negotiate the seller to give us a 3% seller credit. And that 3%
took care of the other costs, yes.
And then took care of so she closed on the $500,000 home for less than 10 grand.
That's great. Yeah. But that's what an innovative mortgage broker can do.
I mean, imagine for a house like that, if you were to rent it, first, last, and security would have been more than what she paid for to own it.
Absolutely, no. So, and it's going to go up unless it's in a terrible neighborhood, so probably not. So it's great. It's what people need to know and what people need to hear, and that's why we're here, because there's just so many misconceptions. If you watch Instagram and you watch, some of these silly things that people are telling you what you need to do, it goes from you need perfect credit to, everything is no money down. Let me show you how to do that. And it's a guy, driving a Rolls Royce with girls on the back, and he can make it happen for you. So, and they're selling a program of seminars to teach you to ask the seller to pay for everything. And they're not always out there that want to do that, especially in this market where pricing is still pretty high. So, I mentioned earlier that you help veterans and foreign nationals. You have special programs for those folks as well?
We help veterans and foreign nationals as well. Foreign national is the technical term for an investor who is not from the U.S., right? Someone who's looking to purchase a home as an investment property or perhaps a second home, but they don't reside or they don't have residency in the U.S., they live elsewhere. We have the largest portfolio of wholesale lenders that offer foreign national loans. And these are very popular because Florida, Miami in particular, is the number 1, if not the number 2 market with the highest volume of foreign national buyers in the country.
Sure.
So they kind of go back and forth between New York and Miami. I think we may be number 1 now. And so, if you're a realtor, for example, and you have buyers from another country who may be thinking that they can only buy cash, they can purchase a home with 20, 25% down. And in many cases, we don't even need to validate their income from their country of origin. We can do it that way, right? But there are programs for investors where we actually approve the loan based on the projected rental income of the property, not the income of the person buying it. Right. So if the property is going to cost $5,000 a month, but it's going to cash flow, you're going to get $5,000 a month in rent or more, that's a qualifiable buyer. Right. Whether it is domestic or a foreign buyer.
Well, they're using the source of repayment as the business of renting the house as opposed to the person's income wherever that may be. Yeah. So much easier to track.
And then with VA loans, these are the loans that are specialized for veterans, right? These are an incredible program, and as it should be, because this community has given so much for our country. the least that they can get is, access to homeownership with the least amount of barriers as possible. And that's what the VA program offers. Not only can you do 0% down if you are qualified, you also have more forgiving income requirements, right? So sometimes you can qualify for more than what you would with a conventional loan. So it's a great program. We are very honored to serve the veteran community. We help a lot of VA buyers. And yeah, I get a lot of personal joy from doing that just because of what they've done for us.
Sure. No, that's wonderful. So for the first-time home buyer, what's the step-by-step process to get ready to have you provide them with a mortgage?
Yeah, so getting pre-approved is pretty straightforward, right? First, I would like to schedule a consultation with a client. Usually I do them over Zoom or over the phone. And it's essentially a discovery call for me to understand what's their goal, what are they looking to buy, what is the monthly payment that they're comfortable with, what does their income and financial profile look like. And in that 20, 30-minute call, I can understand the buyer's needs, understand their profile, and figure out, okay, what's going to be the best mortgage plan to get them to their goal with the best rates and the best terms. So that's the starting point, is scheduling that free consultation and having that conversation. Then the client would apply. It's a questionnaire that takes about 8 minutes to complete. Depending on their profile, they will need to validate their income and their employment and their credit. If you're employed with a company, we'll look at your W-2s and your pay stubs. We'll look at bank statements to make sure you have sufficient funds for the closing and whatnot. And we'll look at credit, right? And the most important thing with credit is not so much the credit score itself, because you can have a credit score in the 500s and still qualify for a lot of programs, right? The important thing about the credit report is the monthly liabilities, the monthly debts, right? How much do you pay for your car, your student loans, your minimum payment on your credit cards? Because we essentially calculate your monthly income, right? And then we subtract the minimum monthly payment on all of those liabilities, those debts, and then the net, what's left, right?
Right.
Your monthly payment should be about 50% of that or below, right? So we actually calculate the buying power of a buyer partly by looking at those monthly obligations.
So is that one of the top 3 things that a lender is looking for in approval of a loan? Source of repayment?
Yeah, we call it the ability to repay rule, right? And with a conventional loan, that comes from the income and the debt. We call it the debt to income ratio of the buyer. But in some non-conventional loans, like the investor loans that don't require any income validation, we don't need tax returns or W-2s or any of that. We just go by, is the property going to cash flow? Is it going to cover the monthly mortgage? Then we're good to go.
Other than the source of repayment, what are the other couple things that are most important for lender approval?
Well, obviously the assets. We want to show, we want to be able to verify that there's sufficient cash for the down payment and the closing cost. Right. Down payment can also come, or we call it cash to close, which is the combination of your closing costs and your down payment. You can get a gift from a family member, so that's acceptable. If it's your primary residence and you're doing a conventional loan, you can, in most cases, use some of your 401k funds to purchase a home, and the most 401k companies don't charge a penalty for that, just for the purchase of a primary residence.
Right.
So there's a lot of ways that we can work, come up with solutions based on what the buyer needs to make it work.
So it's not just a cookie cutter approach to finding money for people. It's looking at their unique situation and matching them up with the program that best suits them.
100%. For example, there's if you're a self-employed, you have a small business owner, you may declare taxes that show your income and your tax returns to be, $40,000, right? Because you have business expenses and you write off a lot of things, as you should, right? But, a $40,000 income may not get you to where you want to go from a purchasing power standpoint. But there's loans called bank statement loans, where instead of me looking at tax returns where I'll get a ding you for those deductions, I look at 12 months of business bank statements or personal bank statements, and I average all of your deposits, right? And then we come up with an income based on that average.
Very good.
And, 99% of the time, the buying power of an entrepreneur when we're using a bank statement loan or other alternative,
Yeah, it's probably higher.
much higher.
Yeah.
Much higher, yeah.
So good to know. Good
Yep.
to know. See, these tips are great, folks. And if you didn't hear them here, where would you have heard them? You're hearing it from the experts. So thanks again. Let's talk a little bit about business owners, as you mentioned. What's the best advice that you can give to them in preparation for applying for a loan? Is there things that an entrepreneur should do if you're planning, well, I want to buy a house 6 months down the road? What should I be doing in prep for that?
Well, certainly, especially during tax season, you should inform your CPA that you want to purchase a home, right?
Yeah.
And because there are certain deductions that a CPA can maximize that do not lower your buying power. Things like depreciation or mileage, right? Those deductions can be added back to your income, right? So the CPA may employ a different strategy knowing that you're looking to qualify for a mortgage with a conventional loan, right?
Okay.
However, even if you're not wanting to necessarily increase your tax liability by reducing your deductions, there are so many other programs like the bank statement loan program. We even have a P&L loan program where we just need a certified P&L from your CPA showing the income of your business, and we can use that to qualify.
Very good.
Yeah, it's for entrepreneurs, there's a lot of options.
Looking back, what financial planning would you recommend for anyone making a career leap like you did?
I was told that it would take 2 years for me to have a successful business, right, in real estate and in mortgages. And I said, you're crazy. In 6 months, I'll have this humming, right? And keep in mind, I left a C-level role at a large company with very cushy salary and benefits and all of those things that come with that. To work in a business that's 100% commission, right? So, I set aside an amount. I called it my career transition fund.
Oh, very good.
And I said, I have this money aside. If by the time this amount of money goes away, if I don't have a business that's very successful, I can always go back to corporate America. And let me tell you that money came and went. While I had deals coming in, it wasn't to the level of income that I was used to when I was a C-level executive for a company,
Sure.
right? So that did, in essence, did take a couple of years to build, but I bootstrapped, I kept focusing on the things that I knew were high impact activities, right? Having conversations like this with you, teaching people about, the ability to buy a home and all the different programs and educating and being part of the community and getting out there. I really focus on that. And, I try to outsource as much of the things that were not focus on that, right? I think oftentimes when you're an entrepreneur, you can love making cupcakes, right? And you think, I'm going to start a bakery, right? Because I love making cupcakes. But there's so much to a cupcake business that is beyond the cupcakes: HR and payroll and taxes and procurement and marketing and all of these things that really take you from the thing that you're good at, which is making cupcakes, right?
No, so important. It's the world's best example is the chef owning a restaurant, two completely different things. So 100%. You're right on target there. So how did you decide what you were best at and what you were going to outsource with limited funds?
I remember I had 1 month where we did like 10 closings, and that was my biggest month by far that I had ever had. And I worked around the clock, just very unsustainable, but I just had to do it. And immediately after, I interviewed a loan officer assistant, and I started with offshore resources, right? So there's incredible offshore recruiting companies that focus on just my industry. And my LOA, who is in the Philippines, he had worked with Wells Fargo, Chase. Those companies also outsource a lot of their processing and loan officer support. So that made it so that I could get someone that's very experienced for much less than what I would have someone onshore. So that helped me kind of
get rolling.
get
Yeah.
rolling. And then, things like scheduling and mailbox and calendar management, those are things that I was able to also start outsourcing so that the phone always gets picked up, the emails always get answered, but it's not, I'm able to be present with my clients, referral partners, go to events and do the things that are high value.
Right. No. So, because obviously marketing was your prior career.
Yeah.
So it's probably something you're very good at. Don't give that up too. Be out there for the community. So no, it's all good. What one daily habit keeps you focused and consistent with moving forward in your business?
I find that waking up at 5 a.m. and having what I call like my miracle morning, like just getting my head centered, meditating, just going for a walk, just having that time where the world hasn't gotten up yet is so impactful because, the work that I do from 7 to 9 is this heads down strategic type of work that I oftentimes cannot get to from 9 to 5 because I'm serving clients, I'm serving agents, I'm in the business, right?
Yeah.
So being a morning warrior was a huge superpower to be able to move things ahead.
Very
that
good.
Otherwise, I'd be too tired after work to work on strategic projects after a day of selling and being on the phone.
Yeah.
And so that was huge, just becoming a really crazy morning person.
Well, that's great.
Yeah.
And I think there are, people that are morning people that are night people, and you've got to learn what that is and what your talent is, because for me, I'm more of a night person, and the thought of getting up at 5 o'clock in the morning would be not good.
Yeah.
And nor would I be very productive, because I'd be wondering why I was up at that time. But for most people, and I hear people that are going to the gym and doing, whatever works for them in the morning is great.
Another thing is leveraging AI. I am a huge AI nerd, and I have implemented AI and continue to constantly explore new things so for example, all my calls are on Zoom or on the phone. There's an AI bot that listens to all my phone calls and summarizes the calls, updates my CRM, writes a recap email for my clients on, hey, here are the things that we discussed, here are next action items. If you do 40, 45 new client consultations a month,
It's huge.
That's hours and hours of recapping and so that cut that time and it does it better than I ever could, right?
Right. No, and the follow-up to your client with that summary, if you want to send it out to them and all, is great.
It's a level of service that I would give when I was a consultant at PwC to executives of Fortune 500 companies, but now I can give that to clients who are buying homes, right?
That's right.
And not minimize the amount of consultations that I can do in a day. I also have tools that read all of my emails and categorizes them into, hey, these are the ones I need to respond. These are just FYI. So then if I have 300 emails in a given day, I can see, okay, these are the 27 that require a response, right? So
Wow, that's great. Now, I hadn't heard that. How does that prioritize it by subject, or does it prioritize it by email address, or how does that, do you know?
It basically reads the email and assesses if it requires a response from you.
Uh-huh.
Yeah, so it'll break the emails into multiple categories, the ones that require a response, the ones that are like marketing emails or notifications, and then the ones that are just FYIs, things that I need to know but are not necessarily requiring my response.
Yeah.
Yeah.
I get so many emails a day, and so much of it is junk that has missed the junk filter
Right.
and has filtered into the stuff you need to at least look at the topic.
But somewhere in there is a client that needs you right away. And if they're email 140 of 300 and you go one by one.
Yeah, no, it's terrible. So I try and go first thing in the morning. That's my morning routine is I wake up, reach over to the phone and, put it back on, take it off airplane mode and go through those emails that have at least made it to the inbox as opposed to junk, to be able to do that, because otherwise if you wait till 9 o'clock, you're jammed with other things that may need your attention. So I'm with you on that in the morning. So that's great. Well, you've told me about AI in your life. Is AI changing how you handle the mortgage clients in the exact, doing the business of providing a mortgage?
100%. I'll give you an example. I had a client who recently reached out and she said, I'm interested in buying this duplex. It's a $1.6 million duplex. And I want you to run the numbers for me to see if it makes sense, right? She was putting a 30% down payment. And, when I ran the numbers, she was about to break even on more. Maybe she was making slightly more, but based on the leases that the property had, she was going to break even. So I said, okay, this is not the sexiest investment if we're looking just at cash flow, right? So what other information can I provide her? So I went on ChatGPT and I, explained to her, ChatGPT, hey, here's what I'm doing. Can you bring in some information about rental growth and appreciation for this type of property in this market, and make sure it comes from reputable sources, right? So it brought in some, facts, 3 to 4% rental growth in this market, appreciation pretty healthy as well. Still not something that if I were to look at it, I'd be, wow, that's a home run, right?
Right.
And then I thought, currently the Big Beautiful Bill has a clause.
The depreciation, I'm sure you're coming to, right?
Right,
Yes.
right. So that there's a bonus depreciation new law that essentially allows real estate investors to front load the depreciation of an investment property if it meets certain requirements in the year that they buy it.
Yeah.
Right. So now what ChatGPT helped me do is figure out what would that look like for this particular client. And the bonus depreciation was so significant, right, that not only did it offset the tax liability on all her other investment properties, but it could also offset the tax liability on her W-2 income as an attorney. So that means that buying this property...
Beautiful thing.
Yes, buying this property means that she's going to pay no taxes on her $250,000 salary this year. Plus, she's going to pay no taxes on the other properties that she owns, her other rental properties.
And she's not thinking about selling this anytime soon because she's going to use the rental income. So
Exactly.
worrying about, the recapping the depreciation, it's great.
Exactly.
No, I'm a real estate and business lawyer, and I'm a true believer that you need to surround yourself with people who know more than you do. And having that team of, you mentioned the depreciation and having the CPA involved and having where to bring those people in or you have that knowledge makes a huge difference. And then, I have to toot my own horn here about, making certain that those agreements are right and the sales agreement is right, and then looking at, what will the seller give as concessions? And maybe we up the price, but they put more in towards, credits and things like that make a difference. So, having that team is so important.
It's huge.
And because like you said, this client, you've saved her far more than what anything could have done, putting her money in the stock market would not have done all these benefits. So.
Right.
And understanding these things as they come along. There was a period of time, if you bought a vehicle over 6,500 pounds, you could depreciate that completely in the year of purchase, which was a wonderful thing and caused me to buy a Bentley because that was I was saving taxes on it, and I'm the king of justification, so it was a wonderful thing. But, and after that, the repair bills gotcha, but other than that, but that's a whole nother story.
I drive a very big car for that reason.
There you go. Yeah. No, it was a great thing. So we share something else in common, and it's the Greater Miami LGBTQ Chamber of Commerce. And you have been active for a number of years, and you're the co-chair of the Real Estate Council, and have done such great things in programming. Just as I mentioned, you were talking about those things that you're telling my audience now about. So you do give back, and we appreciate all of that. And how are you finding is that type of interaction with realtors and business people in the chamber helpful for you?
Absolutely. When I started my mortgage business, the gay community is my biggest network, right?
Sure.
And I joked, I was hosting a party at my house, and I joked to a friend, hey, if I throw a rock into my living room, I'm going to hit 4 gay realtors.
Yes.
And I wasn't kidding. They were all, I know so many realtors in the community.
Together too. Yeah, no.
Yeah. So I thought that's really how I started, getting to know agents and their needs, their pain points, and ways that I could serve them. Now my network of agents is much broader, but it started there.
Yeah.
Right? And, that's also when I realized, okay, I want to take this, I want to make this more official. I want to create a space where LGBTQ plus real estate professionals can come together, connect, grow, get ideas, recruit. And that really was the inspiration behind starting the Real Estate Council, which from what I understand was very popular before '08, but then it went dormant for a while.
Oh, yeah.
So we were basically reviving a once very popular group.
Well, and you've all done a great job with it. And,
Thank you.
Our most recent event at the new Bentley building in Sunny Isles, which was absolutely spectacular.
What an incredible place, huh?
I hope that you get every mortgage in that place, or maybe you only need one or two. But a beautiful property. And for those of you watching and you want to live on the ocean and have an elevator that brings your car up to your front door, and you have a glass wall between the garage to look at your supercars, it's a wonderful thing.
Mm-hmm.
I also checked. It was okay if I drove my Honda there now, too. So it all works for everybody. But it was a beautiful property and a great job in getting them to host an event, which was spectacular. So, and clearly shows who you know and how you know them. And it's a great interaction. So that's all good. We talked about the problems in getting a mortgage and the hesitation people have, and kind of real anxiety when you're buying a house. How do you help clients through that emotional side of the journey, not just the financial side?
I think with anything, it's about asking the right questions and really being empathetic with where people are in their journey, right? In my initial consultation with a client, it's really all about getting to understand not only what their goals are, but what are their points of concern, right? Because for one person, it could be limited cash to close, right? For another person, it could be, I don't want my monthly payment to exceed this amount, right? What can I get a home that I really want for that amount?
Sure.
For other people, it could be concerns about their credit that may or may not be warranted. A lot of times they're not, right? Mm-hmm. They have good credit. They're just under the impression that the credit needs to be significantly higher than what it really needs to be to buy a home.
Right.
But oftentimes, too, when we do a pre-approval, our system generates recommendations of things buyers can do quickly to improve their credit. We call it a rapid rescore.
Ah, very good.
So you can have, it'll tell us, you have a 650 credit score, but if you do XYZ, which is usually a pay down of certain debts, we can get it to a 700 in 30 days, right? And then that can get you a slightly better interest rate.
Sure.
So, it's knowledge is power. And I think that conversation really gets their wheels turning and also gives them more confidence.
What is, you brought up the 700 rate, what is that floor for getting the very best rate on a home residential mortgage?
So the top tier with most lenders is 760. So 760 or above, you're going to have the top tier of pricing, right? And then, kind of goes into tiers below that.
Clearly, you believe in financial education because you keep doing it for the chamber and for your clients and probably the loan officers that you have. What's the one money lesson that you wish everyone knew?
Well, it's interesting because in high school, they teach you home economics. Mm-hmm. So you will learn how to bake a cake before you learn about compounding interest or credit cards or, home ownership, right? So for me, what I found is really interesting, especially when I'm helping, I spoke to a young lady last week, who is purchasing her third investment property. And when I looked at her date of birth, she was born in '02. And I thought, man, if at your age, I was investing the way you are and thinking the way you are, where she's house hacking, she's buying a multifamily, but only putting 5% down. And then she's using the income of the other units as qualifying income. And then she's, and she's rinse and repeating this strategy year over year. She's going to be a self-made millionaire in 10 years.
Yeah.
In the path that she's going, in her 30s, right? And what I've found is that social media has greatly democratized this information, where people are getting nuggets of information and insights into how to become financially independent and retire early through real estate from TikTok and Instagram. And that to me is so powerful because, one reel, one video, one post can take someone down a path of financial independence that they would have otherwise never had access to,
right?
Unless they had a mentor. In the past is, you have entrepreneurial parents, you have parents that are instilling this information, this in your, but a lot of people don't have that, and they're getting it from social media, and I think that's such a cool phenomenon.
Yeah, absolutely, and there's so much of it too. And the interesting part is, what I find is that the good information gets repeated by many, many different sources.
Sure.
And you can kind of weed out the one-offs that come up. Not to say that there aren't plenty of, bad information that comes out, or outdated, or, it's already been done so much, nobody does that anymore, that no money down business and all of that. But I think those are harder to find now. But it is interesting how much we learn and how much information is shared.
And now you even have ChatGPT, who is a great consultant. If you're wanting to have a conversation about, hey, how can I invest with X amount, and here's my situation, like, you can get information. Or if you see a piece of content and it sparks an idea, you can vet it, right? Yeah. And before you talk to a professional about it and come up with your own. And that's another thing that I'm noticing, is that even first-time home buyers, when I have my initial consultation with them, they know their stuff.
They're much smarter now.
They know their guidelines. They know minimum down payment. They know about down payment assistance programs. They know about all these other benefits. They come to the table already informed.
That's great.
Yeah.
No. Well, it makes your job a whole lot easier, doesn't it?
Yeah.
Yeah, no, which
It's
is
exciting.
good.
I like people who are, taking that initiative as well.
Yeah, no, I agree with you. So if someone is kind of sitting on the fence, not knowing what they want to do, whether they want to buy something or not, what's the first step that they should take today?
Well, if you're buying a home as a primary residence, right, I think it's important to understand first your buying power, what you're comfortable paying per month, right? So I think getting pre-approved is the first step, because that'll give you a clear indication of what your buying power is, right? So getting pre-approved with a mortgage professional is free, doesn't take a lot of effort, and is something that will give you a lot more direction and clarity as to what your buying power is, what's your monthly payment, all of that. Then you also want to work with a really great agent. I am a big proponent of working with an experienced agent who you have a good connection with, who understands what you're looking for. And because that person is going to show you a lot of property, and they're going to do a lot of work for you.
Right.
And you want to really dedicate or commit to that one agent, because it is an effort for them to show you a lot of properties and put together something that's going to be perfect for you. And they don't get paid until they close on a deal, right?
Right. You should be loyal to them, and they can be loyal to you.
And find and interview quite a few.
Yeah, right.
But
to see where you
find the one
fit.
when you find the one that you feel comfortable about, and they're doing good work for you, stick with them and have them find you what you need, because there's incredible agents out there, but you want to commit to
Make
one.
sure you got the right one. Yes.
Yeah.
Or as best you can know. So no, I agree with you. We see so many. Well, in Miami and South Florida here, we have so many agents that are just doing this part-time, or may not do it at all, and they've gotten a real estate license, and they say, well, we're a realtor, but we've only closed one deal, because really we don't. This is a part-time fun thing for us.
Right, and I would say that's the majority of agents have maybe one deal under their belt.
Yeah.
You want someone who's doing multiple deals a month and who really knows their stuff. And it also depends on what you're, if you're looking, there may be an agent who's really great with condos versus single-family homes versus investment versus commercial. They all have their expertise, so you want to find one that aligns with what you're looking for.
Yeah, and even neighborhoods now, because
areas,
we go from Wynwood to Coconut Grove. It's a completely different market. It's a different animal. It's a different feel.
100%,
so that an agent in one place may not be the best choice for another location. So you have that expertise. So no, I agree with you. Miami's a high energy city. Lots going on, lots happening very quickly. How do you recharge after a long week of clients and marketing and all of that? What do you do to stay fresh?
Yeah, so I live in Miami Beach, which I feel is a very sort of nurturing neighborhood because I go out and it's very quiet. I'm on the west side of the island, so not as touristy. So I play tennis, I go to the gym, maybe I love to eat and share with friends and break bread. So that's kind of my day to day when I'm not working.
Well, that's
it's
good.
I'm now getting into pickleball.
Oh, very good.
So that's been something.
Has that been a hard transition from tennis?
No, it turns out that I'm pretty competitive at pickleball sort of very early on just because it's transferable, right?
Yeah,
But you do have to regulate.
It's different though, from what I understand. Yeah.
Yeah, you have to regulate how you swing and the ball's so light. So you got to really, but yeah, it's a lot of fun. It's a very social sport. And so I've been enjoying that.
Well, that's good.
Yeah.
Is there one place in Miami you'd tell a client to celebrate after buying their first home?
One place to celebrate. Well, I mean, I think having a party in your house when it's empty is great because you can turn your house into a club, right? And have just like a crazy party because it's empty. There's nothing in it.
There you go.
Right? And then you do the proper housewarming once the furniture comes in. But do the crazy wild empty house, turn the house into a club, have such a fun time with all your friends, and then have a proper, with the family and the friends housewarming once the furniture comes in.
There you go. And that pre-construction or pre-reno party is especially fun.
Those are fun. Yeah.
You can't hurt a thing then.
Yeah.
So
all you need is lights, a smoke machine, a couple of,
It's all good. Yeah. We had a pre-construction party at the condo we recently bought, and a friend of ours fancies himself as this. I don't know what the person is called, but you take a champagne bottle and you take a saber and cut the top of the bottle off to open. And so he likes doing that, but I don't like having him doing it in a house that's done. But we gave him the perfect opportunity to do it at the pre-construction party, and it did make a hole in one of the walls, but it was repairable. But man, that top flew right off of there. And but it is a fun thing to do. So it is. I love that idea of celebrating in your house instead of someplace else. And the other part of it is the nice change that you make from before the furniture's there to after. So people can appreciate what you've done. What do you see for buyer opportunities in the next few years?
Well, I think it's very market specific, right? For South Florida, I'm seeing that condos are sort of in their fire sale moment, right? There's a lot more inventory in condos than there are in single family homes. So I'm just seeing a lot more sellers give significant price discounts and seller credits, which is essentially money that the seller is going to give to offset your closing costs. So there's just a lot more opportunity to get really, really great deals in condos than from what I've seen in the past. Also, I think if you're looking to invest, even if you're a first-time investor, you don't have to invest in the market that you live in. I made my first investment in Chicago. My second investment was a house in Ocala. I'm looking at multifamilies in Oklahoma City. Like there are groups and organizations and resources that allow you to cast a much wider net and connect with agents and property managers in other markets that have perhaps, greater cash on cash return, greater, just better numbers than what you would have in your domestic market, right? So you don't really have to be, you're not limited to just buying in the market that you live in. You can buy anywhere. In
those markets that are outside the area here, do you go with a investment group that you become a part of, or are you owning those individually and just have your own property manager deal with it?
So I found my first 3 properties with a company called Real Wealth Network. Real Wealth Network, they have about 100,000 members. It doesn't cost anything to join. You become a member, and then they assign you to an investment advisor. They then also give you access to, they have about 20 different markets. They focus on markets where you can get affordable homes and good rental income. Markets like Jacksonville and things in North Carolina and Oklahoma City, which I'm really interested in, Cleveland, Cincinnati. There's a bunch of other markets. But that was sort of where I got my wheels turning initially. I went to one of their events where it was kind of like, rapid what do you call these dating? Where you
speed dating.
speed
Yes,
dating. Yeah, it was
no,
like
very good.
speed dating, where like every
Not that I
single
know, but yes, okay, yeah.
every single agent team and property management team would get up there, talk about their market, talk about some sample properties, and they would share a pro forma, which is a one-page document that shows what you're projected to make on that property, and then you can learn about that market and what's going on there. So it was really there was like a 2-day deep dive into all these different markets.
Oh, interesting.
And then, I would log in and listen to webinars like weekly. I would listen to their podcast. And so I geeked out on a lot of this information for a good 6 months before I decided on my first one. So they have been a great resource for me, and continue to be. I love, when it comes to finding opportunities outside of my market, that's one of the first places I go.
And that's Real
Wealth Network is the name of the company.
And so if you buy something through them, do they act as the realtor, and that's how that works, or do they manage it for you? How does that?
So they connect you with agents who are part of their network, and they vet the agents, and they connect you with property managers in those markets as well. Because like the one thing you want to do as a real estate investor is you have to have you don't have to, but for it to be passive and not be a part-time job, you're going to want to have a property management company who is vetting your tenants,
Sure.
Running their credit, getting referrals, collecting deposits, doing inspections, all the things that go into managing a property. You don't want to do that yourself.
Yeah.
And these property management companies typically charge anywhere from 8 to 10% of your rental income as their fee. Well worth it in order to have that peace of mind that the properties are getting managed well, right?
Sure.
So they vet the property teams, they vet the management teams. And so when you're looking at these different markets, you interview the teams that have already been vetted by them.
Sure, which is great. They've done a lot of that work for you.
Yeah.
So, well, great. It's a good opportunity. And as I look at properties for investment, the return on your investment is certainly better in other markets from an investor standpoint than here. Our prices are very high, and our rentals are high, but not in the same way that they may be in some of the Midwest. And which is great. So good. What's one bold prediction that you'd make about the mortgage world that others might not agree with you on?
A bold prediction that, interestingly enough, I saw a statistic recently that showed that there's going to be an uptick in purchases in 2026, but actually the amount of loan officers and experienced agents is actually going down, right? So there seems to be an uptick and a lot of data suggests that we're going into a very active 2026, more of a buyer's market, and really the amount of professionals that are really doing this full time is actually getting smaller. So for real estate professionals, for mortgage professionals, I think the pie is going to get bigger, and there's going to be less competition, right? You still have to be good at what you do and make sure you prospect those people and get them into your network. But I think it's going to be a really solid year for the real estate industry.
Very good. Yeah. And so especially from the mortgage industry, you'll have a bigger piece of the pie, or the pie is going to be bigger even if you have the same percentage of piece, so to speak.
Right.
Very good. Yeah. Well, I hope everyone agrees with you. So 5 years from now, how do you want people to describe the way you've changed the mortgage experience?
Well, let's see. When I first started the mortgage business, I had a mentor, and I was in his office one afternoon, and he said, "Hey, I have to take this phone call as a client." And he talked to the client about a transaction that they were doing. And then after he hung up, he told me, "This is the 18th transaction I've done with this gentleman and his family since we started working together.
Wow.
X amount of years in the past." And I just thought about the incredible power of creating generational wealth through real estate, and how rewarding it is that I can play a role in that. And I remember thinking, I can't wait to get a phone call from a client years down the line where I'm helping him or helping his daughter or helping someone in his family acquire yet another property, and seeing how they grow financially and establish financial independence and build generational wealth through something that I had a part in.
Yes. How wonderful. Yeah, no. It's interesting. I was just giving a talk to a group of business people over at Chase, and we were talking about succession planning in business and how that relates to wealth managers in the financial area. And one of the things that we talked about was this succession planning and generational wealth, and to make certain that these bankers and wealth managers were equally building relationships with the children, the grandchildren of these people that were clients, so that when that moves down to this next level and the next level, they're still in a position to be there when the phone rings, and to be the person that they call, as opposed to, well, my son has his own financial advisor or my own mortgage broker, and they'll rather go with them when things change. So it's important to be considering that generational wealth, and it's going to turn that way. So it's going to come out. So no, you've got a good stand on that.
That's great advice. Bring your kid to financial planning day.
Absolutely. Yeah, no, we have mortgage day. Yes. No, listen. So because, outside of the LGBTQ community, most wealth will transfer to a child or a grandchild and all of that. And with younger people in our community, that may happen too, because they're having more children than I do. But, but it's all part of it. So I think it's important. So.
And you hit on something that made me think about, you asked me what's going to happen in the next 5 years. We are actually witnessing some of the greatest migration or transfer of wealth.
Sure.
Which is coming from, baby boomers, parents who are passing on wealth to their children. And this is not just wealthy families who are doing this. These are the mom and dad who were a mailman and a teacher who have pensions and retirements and are helping their first-time home buyer parents, children, purchase real estate and doing it. So this is happening, and there's a big cohort of the population that is in that position to help their children. It's definitely something that I'm going to see happening more and more in the next couple of years.
Oh, I think so too. Yeah, which is good for all of us.
Sure.
So it's good. So at the end of our interviews, we always like to do what we call a rapid fire.
Okay.
And what I'd like to do is throw out some questions to you and give us the first answer that comes to your mind. It gives our viewers a better understanding of Yianni the person.
Okay.
Okay? Best mortgage hack most people don't know.
You can buy a home with 0% down.
One piece of bad mortgage advice you hear all the time.
Doing a temporary buy down. I think that's a waste of money. Do you need me to explain what those are?
Yeah, tell me what that is.
So a temporary buy down is, a buy down is when you pay a fee to get a lower interest rate. So let's say the market is giving you a 6.5% today, and you pay $5,000, and now you have a 5.99%, right? And then we run the numbers. It's going to save you a couple of $100. You're going to break even in year 3, right? That's a permanent buy down. A temporary buy down is sometimes referred to as a 2-3-1 buy down or a 2-1 buy down, is when you, on year 1, if you have a 3-1 buy down and the market is giving you a 7%, on year 1, it's going to be 3% lower or 4%. And then year 2 is going to be 5, year 3 is going to be 6, and it's not until year 4 that you're going to have your 7% rate. So people may think, oh, that's a great deal. I'm going to have a rate that's 3% lower on year 1. But you're actually paying for that buy down up front. You're prepaying the interest that you would have otherwise.
Prepaying the 3%, yes, that you're saving, yeah.
Exactly. You're prepaying the interest. So is it really a financial benefit in the long term? No,
not
you're
so
just
much.
Prepaying interest.
Okay, good to know.
So a lot of people market these because it's a sexy thing to say, oh, you can start with 3%, but what you're actually doing is taking a seller credit and prepaying interest for that. Just put the seller credit in your pocket and put it in a high yield savings account and just make some money off of that instead of prepaying interest to the bank.
There you go. Okay, good piece of advice. Biggest mistake first-time buyers make?
Buying a home that's too expensive. Conventional guidelines allow you to purchase a home at a 50% debt-to-income ratio, meaning that pre-tax, right? If you make $10,000 and you have no debt, right, no monthly debt, you can buy a home that's $5,000 a month, right? But the reality is that that's pre-tax, right?
Yeah.
So post-tax, that means that you're paying more than maybe 65 or 70%, or your income going to a home.
Yeah.
And, that can make for a very tough situation if someone loses their job or has a health issue or just anything happens, right?
That's right. Or those other bills go up.
Right. That's another thing.
They
Taxes
probably bought
go
a
up
fancy car and a things that they've put on credit. So
I always tell buyers, listen, your buying power may be $1 million, but if what you're comfortable with is this payment that's more in the 800,000, try to, let's look at that. Of course, that's a very personal choice.
sure.
But I think also, your first home doesn't have to be your dream home, right? You can have a home that's your starter home, and that's a stepping stone to then purchasing your move-up home a couple of years later. The difference is you're going to be purchasing your move-up home with already equity amassed on a property, which will make purchasing that new home a lot easier, more attainable, because you're starting from a place of equity and not zero, right?
Yeah.
So, for first-time home buyers who are kind of debating whether I go starter or I go right to my move-up home, it might make sense to maybe, stepping stone into your dream home. It doesn't have to be your perfect home from the get.
Absolutely. I know I'm on my fourth forever home.
Okay.
So it happens at every level. So yeah, and you're always going to find something else that you like better later.
happens,
So why
yeah.
not start reasonably? I think it's a great advice. Your guilty pleasure, Netflix or Miami nightlife?
It used to be Miami nightlife. Increasingly, it's becoming more Netflix and Uber Eats.
Oh, and Uber Eats.
Yeah.
Better yet, you don't even have to leave home. You can
Uber
watch
Eats and Netflix,
watch a
yeah.
movie and get fed. So it's all good. Your personal money motto in one sentence.
My personal money motto, live within your means. I think it's really easy to get carried away with all the trips and fun and shopping. I think living within your means is a virtue that a lot of people maybe don't see as sexy, but it can be really powerful because the sacrifices that we make today are the things that allow us to achieve financial independence in the future.
So important. Yeah. I wish someone would have told me that a long time ago. But I have a lot of trips to Europe to show for it, though. But it's very good advice. What I love about Yianni's story is that it proves that you don't need to be perfect to start. You don't need perfect credit. You don't need a huge amount of cash. You can get started in home ownership or investment property ownership early on if you have the right teacher, the right advisor, and someone guiding you in that right direction. So if you're dreaming of owning a home, talk to a professional like Yianni to help find that home that's really right for you within your means, and really think about what it is today, what it's going to be tomorrow, and what it's going to be 30 years down the road. Because making the right choices early on will make all the difference in your life moving forward. Until next time, I'm Marty Davis with The Marty Davis Show, reminding you that take bold steps, ask great questions, and make certain that when you make a decision, you make it with the best advice possible. Until next time, we'll see you. Enjoy the show. Thank you so much.
My pleasure.
This
Thank
was
you.
great.